So today I'm gonna bless you guys and I'm gonna talk to you about exactly why your credit stacking business is failing, okay? I'll go ahead and go over it real quick, and I'm not even gonna waste your time. I'm gonna tell you straight up. You do not know the 4 factors that actually you need in order to pre-qualify a client. Your next factor, you're not pre-qualifying your client. You're not doing proper compliance and preparing your clients for processing. You're also not creating an application flowchart custom to your specific client. You're also not using the right projections based on your specific client, and you're still using a VPN or your IP address to submit applications. You know what the hell you're doing, and you know exactly what I'm talking about. We're gonna expand on every single one of those things that I just mentioned as it pertains to why your credit stacking business is failing. So without further ado, let's go ahead and get started. By the way, if you don't know, this video is brought to you by Pennington Consulting Group, where we always say our goal is to help you reach your goals. So if you're looking for some funding, if you're a business, if you're looking to start, grow, or even expand your business, or in need of some funding, you want to go ahead and click the link in the description below and visit us at Pennington Consulting Group. In addition to that, if you're looking to start your own business loan agency, this program is also brought to you by Broker Solutions Academy. And what we do is we help loan brokers and understand and simplify the various funding products that are available in the marketplace so they can properly serve their clients, stop the endless confusion and self-defeating pointless rat race they're currently in, and grow their business while maximizing profits by teaching them how to become a real business loan broker, not just a glorified referral partner. So definitely there's going to be a link in the description. We've worked all year long to really package this program, and it's the most comprehensive loan broker training there is. Guaranteed you're going to be successful, especially if you're going to be having me as your coach, okay? So definitely want to check the links in the description. In addition to that, if you're interested in some of our media services, we offer YouTube editing services. I have my team. You see how great these videos are. Come on, okay? You look at our website. Look how good those websites are. And look at your website, okay? So if you're interested in having us work on your website, if you're interested in having us work on your YouTube, or even get your social media game just right, you want to go ahead and reach out to us. There's going to be a link in the description on how we can partner up together to help you grow your social media presence, your web presence, so you can position yourself for success, as I always say. So anyway, so if you don't know, my name is Brian Mucklin Sotieno. I've been in the funding business for years, over a decade and a half now, almost going on 15 years. And one of the things that I used to do a long time ago, before everybody became a credit card stacking expert, before all of these Instagram and Facebook ads where people are promising 0 to 50,000, $200,000, $1 million and 0% financing, I used to do credit card stacking. And it's an amazing product to offer for brokers, real brokers, not glorified referral partners, and it's an amazing product for clients. Let's describe the product so we all make sure we're on the same page. What is credit card stacking, especially business credit card stacking? Because you can do personal credit card stacking, but we're specifically talking about business credit card stacking. This is the product where small business owners, startups, or even established businesses can get $50,000, $200,000, $250,000 or more in unsecured credit cards. Some people call it credit lines, which is the same thing, at 0% interest. Generally, most lenders have 0% interest for 6 months, 9 months, 18 months, even 24 months at 0% interest rate. Okay. Some of the major benefits of this program is none of the lines report on your personal credit. They only report on your business credit. Helps you build business credit. You only pay on the amount used, unlike a business loan or personal loan, which you pay for principal and interest every single month, regardless if you use the money or not. And especially for a startup business, you don't know how much money you need. These are ideal. Especially for startup businesses, you don't have any revenue documentation. These are ideal because they're stated income product. So it's a win-win situation for the broker, because we get paid really high commissions on these products, up to 10% commission. I used to even charge 12%. I've worked with referral partners that have charged as high as 15%. And I see why, because it's an amazing product. Where can you go and get $250,000 at 0% interest at a startup business that these lines don't report on your personal credit, so it will not affect your utilization? Can't go nowhere. So it's an amazing product, of course. But let's get down to the nitty gritty. Let's talk about why you, in your credit stacking business, those dreams of you starting a business and getting clients $50,000, $100,000 and charging 10%, 12%, why is it not working? Why you keep submitting applications and getting denials? Clients getting pissed off at you while you wasting money on Facebook ads. So the first reason as to why this is not working is you don't understand the 4 factors. something that I teach. I believe that as a business loan broker, specifically as it pertains to credit card stacking, you have to know what the lenders are looking for. And there's 4 things that the lenders are looking for: directory items, utilization, age of file, and inquiries. There's a video that I created somewhere around here that talks about understanding this product and exactly what the lender look for. You definitely want to check that out. But you have to understand those 4 factors very much so in detail, because credit card stacking is not just by somebody that has the highest score. I see plenty of people out there just advertising for somebody with a 700 plus credit score. You think you can get them $250,000 in funding. That's not how it works. Understanding the 4 factors and understanding exactly what the lenders look for as it pertains to each one of these factors and what they're evaluating is huge. I'm gonna quickly go break it down to you, and this is definitely not the right video, but I'm gonna just give you a nice little synopsis. So there's 4 factors, of course. Directory items, duh, you know what the lender is looking for. Negative items, late collections, charge-off, bankruptcies, tax liens, judgments, anything negative on your credit report, depending on what it is, how much effect it has on the borrower's file, it will determine if they can qualify for credit card stacking at that specific time. Utilization, huge, huge, huge. Utilization is balances in relation to limits on all open revolving accounts. The lender looks at all the client's revolving accounts and they really criticize them. Why? You know, number one, you're applying for business credit cards, an unsecured revolving account. So if I walk into your bank and I was seeking $50,000 to $100,000 in unsecured credit history, would you be curious as to what my past unsecured credit history looks like? Absolutely. So there's a few things they look at as it pertains to the second factor. They look at how you're managing your utilization. How high are your current limits? How many accounts, revolving accounts, do you currently have open? What are their opening dates? How seasoned are they? But most importantly, how high are your current limits? Because if you're somebody that has like 2 credit cards with 3 $500 limits, you're not gonna get $250,000. You know, it's just not gonna work. Generally with credit card stacking, you're approaching multiple lenders at the same time or within a short period of time and stacking credit cards. You go to lender 1, you get $25,000, $30,000. You go to lender 2, you get $40,000. You go to lender 3, and that's how it works. So if your previous history, you're not used to handling $15,000 cards, you're not gonna get that, okay? So you have to really look at how they evaluate that second factor. The third factor is age of file. Age of file kind of goes hand in hand with, you know, seasoning. How much of a history do you have on your credit report? So the more seasoned you are, as it pertains to the oldest item reporting on your credit profile, does help the lender figure out how much they can extend to you. It's a very, very important factor that they look at, which is seasoning. The next thing they look for is inquiries. And I always say this goes back to that old jokes. Banks only lend money to people who don't look like they need money. So if you have a lot of inquiries on your credit report, a lot of recent inquiries on your credit report, you're not going to get funded for credit card stacking. It just depends on how many inquiries that you have on your file. So those are the 4 factors. And you need to understand those 4 factors, and you need to know how to evaluate a credit report based on those 4 factors and determine exactly what that borrower qualifies. Because that leads me to that second point. The second point is you are not doing a proper evaluation of your clients. And you're not doing a proper evaluation because you don't know what to look for. You're out here acting like a used car salesman, submitting a bunch of application because, oh, it has 700 credit. Let's see if it's going to get approved here. Let's see if it's going to get approved here. And you're getting your clients and racking up inquiries, and they're getting disappointed, and you're getting pissed off because you're not even meeting your ad cost. You're just basically submitting blindly. A business should not be this unpredictable, especially when it comes to something as easy as this. You should know exactly what the client qualifies for. So a proper evaluation does a few things. Sets the right expectations with your borrower, and most importantly, number 2, allows you to make sure you know what the client qualifies for and you're not wasting your time. So you must be able to do proper evaluation, and that leads me to the next thing. You have to be able to, once a client is in, you've evaluated their credit, you've determined what they qualify for, you've set the right expectations, now you have to do what we call is compliance. Before you even start submitting the applications, you need to go ahead and do what we call is compliance. This is, you know, I always say as a good business loan broker, as a good business loan processor, you are the underwriter before it gets to the real underwriter. So we're gonna look at the LLC, we're gonna look at how it's set up, we're gonna make sure that the addresses matches, that the name is very similar. You know, just basically standard things. in order to make sure that when the lender looks at this information, that the information we're presenting is as accurate as possible. So compliance is critically important, and compliance goes hand in hand with setting the right expectations as to what the client should expect as they're going through the process. Because at the end of the day, we all know how credit card stacking works. There's no relationship with the lender unless you have a relationship with like a local bank manager. But in essence, we submit the information on behalf of the client. Majority of the applications are being submitted on behalf of the client. We're getting to that point now where we have relationships with some banks, not all of them, but still, if you're processing credit card stacking, majority of applications, you're processing them on behalf of the client. You're getting on the computer and processing those applications on behalf of the client. That is basically what we're doing. So you must set the right expectations with that borrower as to how they need to communicate with the lender when they're in processing. So really, really huge. Setting the right expectations for the client as it pertains when they're in processing. Another thing is, you're not creating a custom flow chart for each one of your clients. There's not a one system fits all. You're not just going to go to Chase, B of A, Amex, Truist if they live in that state, PNC. No, it has to be, okay, who do you go to first? Every single client is specifically different as far as their roadmap in order to help them reach their funding goal. Having the knowledge on how to come up with that roadmap is something that we teach you and guide you through in our course, our credit card stacking course. There's going to be a link in the description. We teach you how to actually do this for real. Another thing is, maybe you're not using projections. You should know that credit card stacking is a stated income product, and the lenders do allow for projections to be used. And you need to use the right projections based on a few different factors: type of business, client's credit, industry, and then also their location. This is what, and lastly, also their previous history, as far as what's, revolving account history, to be exact. This is what allows you to come up with a good flow chart on what applications submit first, so you can maximize on the approvals. Okay, and lastly, this is a good one right here. You're probably still using a VPN, or better yet, you're so stupid you're using your own IP address to submit these applications. That's why you're getting denied. Okay, if you get in my course, we'll teach you a tool that you can use that is definitely not a VPN, that is definitely not your own IP address to submit this application. Because think how silly it is when you're submitting applications for clients that are living in Florida, California, New York, and you're living in Kentucky somewhere. At your IP address, it's your mom's house, where your IP address, your ISP, and all this information is something that the lender collects. Given the fact that identity theft is the fastest growing crime right now in the US. So of course, lenders are very critical with how they're dealing with sensitive information. So if you're using your own a VPN to submit applications, you're just decreasing the amount that you may qualify for. And also you're putting your application to a different line where it gets heavily criticized. We want automatic approvals. I've made videos here where how I submit the applications and land automatic approvals right there, right in front of your face. And that's what you want. That was your dream when you got into this industry. So anyway, gave you a list right there, some things to consider as to why your credit card stacking business is failing. You're not pre-qualifying your clients properly. You're acting like a used car salesman and not a real business loan broker, but a glorified referral partner. You're not doing proper compliance. You're not preparing your client for processing properly. You're not creating an application flow chart custom to your specific client and their credit profile. You're not using the right projections. And also you're still using a VPN or your own IP address to submit these applications. Shame on you, okay? Shame on you. There's going to be a link in the description. We do have a credit card stacking program that allows you and teaches you exactly how to do this. You definitely want to take advantage. And we are running a promotion right now where you can go ahead and get in for a very, very heavily discounted price. That's all I have to say. Link is going to be in the description. And given the potential profits you can make with credit card stacking, with one client, you can easily make $5,000 if you get them $50,000 or $100,000 with 10%. You charging 10%. It's a beautiful system. And part of our program as well is we teach you how to generate leads. We've come up with actually a proven system how you can generate unlimited leads for your business. So anyway, I appreciate you for joining me today. Like always, there's going to be a link in the description how we can partner up and work together. I appreciate you. Salute, and I'll see you in the next one. Anyway, if you've stayed with me through the end, I appreciate you. I really do. Please go ahead and give me a like to the video, subscribe to the channel. And I guess I should go ahead and pay some bills. Let you know what this video is brought to you by our sponsor, Broker Solutions Academy. There's going to be a link in the description. We work with people that are interested in becoming a business loan broker. We have a very comprehensive business loan broker course, and we're going to be teaching you everything you need to know about how to become a business loan broker. Our mission statement is we help business loan brokers understand and simplify the various funding solutions that are available in the marketplace so you can properly serve your clients, stop the endless confusion and self-defeating pointless rat race they're currently in, and grow their business while maximizing profits by teaching them how to become a real business loan broker, not just a referral partner. This video is also brought to you by Pennington Consulting Group, and that's where we work directly with entrepreneurs and also business owners to help them get funded. So if you're looking to start, grow, or even expand your current business, Pennington Consulting Group, there's going to be a link in the description where you can go ahead and schedule a time. And like we always say at Pennington Consulting Group, our goal is to help you reach your goal. Again, thank you for joining me today, and I'll see you in the next video.